For the first time in nearly 60 days, Bitcoin has now broken a range of low volatility, and we've broken it to the downside. Yesterday, I made a video showing you 3 big reasons why we might be heading down, but also telling you that I'm not expecting this to kick off, yet we have ended up doing that. We have ended up moving towards the downside here, and we've cleared the breakout levels, right? I mean, you know, we had this wick down here, we had a couple wicks like here. We've cleared all of them, which to me means that this is a very real breakout. It certainly could be something that ends up recovering back up and turning into a deviation, and I'm going to cover that with you in this video right now. But as far as breakouts go and the signs that they show when a breakout is initiated, we have done that right here. We even saw a little bit of a volume spike. Granted, this was on the wicks that happened a few days ago, but on this particular breakout, you know, after that, we didn't see a huge amount of extra volume, but the volume is there a little bit. And really, this just sends us down to 25K, 24K. This has been one of the most likely outcomes that I've been discussing with you on this YouTube channel. You know, even though I didn't want to see it happen, and again, I'll go into that stuff with you in just a second. But by the way, the biggest thing for why this has happened is quite clearly the dollar. I outlined for you guys this resistance level on the dollar, and how, you know, like this has been capping the dollar's upside since the beginning of April. But I also warned you guys that if we do end up seeing the breakout, this could lead right up towards 104. And so we have seen this huge breakout right now. You know, so for those of you that are scrambling to read your news articles on 𝗬𝗢𝗥𝗙𝗟𝗏 or whatever the case may be to try and understand what's going on in crypto, I'll save you the hassle and I'll save you the time. Bitcoin has dropped because the dollar got stronger. That's all. So, you know, it might be that there's some sort of fear, uncertainty, doubt in the space right now. There's news articles that make it sound like Russia's trying to ban Bitcoin again or something. But I assure you, it was simply economics. That was all. And the same thing happened to the S&P 500, a very small drop. It's clearly hitting Bitcoin more. And this is why I'm not worried. It's the same thing that I told you guys about previously anyway, which is that, you know, Bitcoin, even though it could be dropping down, if it does end up falling down to 25K, that still puts it 60% above its high. It still puts it in a really strong position. And as long as, you know, traditional finance still holds its ground where it is, we're good. So all of the factors I've been speaking to you guys about that could have some sort of relief for Bitcoin are still present, and I absolutely love that. I want to take a very quick look at dominance here, and we are obviously going to talk about, you know, Bitcoin falling down to 24 and maybe rising back up and so on. I'm going to go very in detail on that, but you know, for the dominance right here, we're clearly seeing a drop. I don't want to say that this is a big drop whatsoever because we were here literally just like 3 weeks ago, 2 weeks ago. So, you know, it's clearly not the biggest drop in the world for Bitcoin's dominance, but we have potentially kicked something off. Let's talk about the actual price action just for a minute and where we might go. Now, look, the most likely place is going to be that 24, 25K area with my analysis right here that I've been sharing with you guys on this channel for a while. And it's basically, it's the same form of analysis I always do, right? I'm pretty simple with my analysis. I just kind of look at support levels and I say if a support level fails, we probably fall down to the next area of support. And on this chart, that next area that I can draw is going to be here. This line is drawn at 24.8, but really we're looking at anything between 24,000 and 25,000. And you know, to make that even more clear, I can actually just draw a box that looks something a little bit like this. And this is more or less, you know, the kind of support range that I'm going to be expecting for this market. There is definitely strong support even lower, like basically as low as here, I would say, to 22.8, 22.7. You could even go lower down to 22.5. Very, very fair to say that this is support. And this is the great thing about this chart right here, ladies and gents, is if we actually look at this and where we are and where we could be going down to, this is a huge area. We saw some consolidation back here in 2020. We saw heavy resistance here in 2022 and 2023. So naturally, you know, this is the most logical area of support for Bitcoin, and it's why I'm not I'm just not worried at all about what's going on in this market. Let's take a quick look at the 𝗬𝗙𝗏s dashboard, refreshing all of the data here today. We've seen the fear and greed index slip down, but let's bear in mind that this is quite out of date data now. You know, the move has happened throughout the course of today, but we only collected this fear and greed index data 19 hours ago. So we're going to get this updating within the next 5 hours, and I think we're going to see a sharp drop in the fear and greed index, probably the low 40s, hopefully if we're lucky even the 30s. You know, and the long and short ratio, I'm sure we're going to see this even out a little bit as well. Let's just take a look at the very short-term data here to see if there's any kind of any kind of kicking off of the long short ratio dropping. So 5-minute time frame, we're very strong right now, heavy long, 66% for retail traders right now in the 5-minute time frame, so that's not ideal. Let's look at this on the daily time frame, and with 67%, we've got 2.05 long positions for every short for retail traders right here. Still clearly very bullish, no matter which time frame you look at, to be honest. 2 hour, 5-minute, 1 day, we're all at a ratio of 2. So yeah, clearly, I mean, you know, I considered a long position actually off this level, and I didn't really, you know, like, it was a very brief consideration. I didn't really think about it for very long, and all in all, maybe like literally 3 minutes, 5 minutes. You know, and the reason that I didn't really feel like there was anything there, you know, and the long position, it would have been right here. So I would have been aiming to play something a little bit like this, you know, this move up here. Nothing big, you know, almost a bit of a scalp. But, you know, the reason that I didn't end up committing to that trade was the long and short ratio. It was just too high. And, you know, I've got certain things that I keep track of, certain things where if they disagree with my trade, I'm going to take it really seriously, and I'm going to very carefully reconsider if I should actually even make the trade in the first place. And the long and short ratio is one of those things. It just tends to be something which is really important to watch for. And it, yeah, very well could be, you know, in this case, indicating quite a lot more downside to come. You know, we dump typically when the long and short ratio is this extreme for retail traders. Long traders are holding the same. Top traders are holding the same positions. They haven't really moved. Let's actually take a look at this data just to double confirm that. 1.14 longs. Yeah, and we were at a ratio of 1.16. So we haven't seen any difference for top traders. I myself haven't done anything different with my position. This position that I opened at $21,500, which has made me over $200,000. You know, I'm still in this position. This is obviously an outdated screenshot. I took the screenshot a while ago. You know, but I've still got my stop loss at 23.7. I'm definitely open to moving that down. I can put it down to 22 point something. It would be a small profit if it closes, but it would still be a profit nonetheless. And I've already secured over $100,000 on this position anyway, which was basically exactly what I put into the trade. I've taken it all out, so I've doubled my money on this trade. Of course, this trade and every other trade I make went inside of the 𝗬𝗙𝗏s VIP group. And if you do want to get yourself inside of that group and see what's up there, you can follow these steps on screen right here. And while you are looking at the description, I do want to highlight the BingX link in the description for you guys. And Bitflex, both of these exchanges do not require KYC, and they have the same trading options that you're used to on Bybit. So if you're affected by that news, if you don't want to do KYC, if you don't want to submit a picture of yourself and a picture of your ID because you care about your privacy and so on and so forth, these are some great options that are available to you. And BingX, with over $5,000 in bonuses, will also allow you to trade stocks, indices, commodities, and Forex, all with the same Bitcoin deposit, all without KYC. Very cool indeed. And if you are interested in using Bybit, this is the main home for myself. I am going to be using a little bit of BingX and Bitflex as well, of course, but if you are interested in Bybit, there are over $30,000 in bonuses, just free money that they're going to give you for signing up using my link in the description down below. And you can deploy that money back into the market, and any profits are yours to withdraw. It's really cool. OKX is doing something similar with up to 30K in bonuses, but their bonuses are structured very differently. They're a lot easier to get, so check them out as well. There's a lot available for you with the links in the description, and you can come right back to this video right here after that. But back to the price action for Bitcoin here in this really in-depth analysis, guys. If you are appreciating it so far, do me a favor and hit up the likes. What I'm seeing here is quite clearly the the setup to continue taking this market down, given how extreme the long and short ratio is for retail. Now, like I said, top traders, myself as well, although I certainly don't count myself as a top trader, I haven't scaled back on my long position yet. And the reason that I'm not worried about this is that we are potentially just falling into some really nice supports, and this is something which I'm just not sure if people are actually retaining perspective of. But we've had some really nice rallies here. We had a big leg up right here, and then that was kind of followed by a good few weeks of consolidation, and then we had another big leg, and this has been followed by another good few weeks of consolidation. But pullbacks are very natural and welcome, to be honest, during uptrends like this. So you ask me, like, well, why haven't I changed anything with my long position? And my response would be because getting pullbacks within an uptrend is the most healthy thing that this market can produce. Like, as far as signs that I want to see that tell me I should continue to hold my long position go, as far as those signs go, a pullback is the best one. So what I'm not going to do is sit here and become bearish when the market is doing exactly the only thing that it has to do in order to keep on rising up, which is be healthy. So, as long as these pullbacks don't get too extreme, I'm going to be okay with this. Now, what I don't like, and this is genuinely very concerning, is what's happening with the dollar. The dollar has started to clearly reverse. I outlined this level for you guys, and the reason that this is important is that this acted as a temporary ceiling for the dollar. And guys, this is a big deal. This is one of the technical analysis fundamentals, and it's one of the big things that I covered with you VIPs inside of the 𝗧𝗙𝗥𝗙𝗦 Academy course, which again you can join by following these steps on screen. But this is a really important thing that I do speak about a lot, which is that when you kind of establish a ceiling, for some period of time, it becomes psychologically significant. It becomes technically significant. And if you break levels which are significant, you can expect big breakouts a lot of the time. So, that's why, and it's no surprise at all, that's why the instant that we broke this level, the dollar shot right up. Like, that's not surprising at all to me. That's exactly what I would expect to see, is that the dollar shoots up massively when it breaks local resistance, and it's probably just going to be on its way to its next area of resistance, which I've been saying is going to be around this 104 area. But it's hard to say. There's resistance in all sorts of places on this chart. These boxes, I want to remind you guys, I've been drawn for a very long time, and I think they quite fairly represent where some of the support resistance on this chart might be. So I'm pretty happy with where these levels are at. We're looking at, I think for sure the top of this green box could be a problem for the dollar, so 104, but also 105.5 up to 106.1, and then 109 to 110. These are important levels on the dollar index chart, and right now we're kind of far away from the next kind of significant reversal zone. So I might have to expect some. I don't want to say that the dollar is going to keep climbing up, because that's really bad for our markets, but I don't have a reason to say that it should stop moving right now. I don't know why it's moving. I'm sure there is a really good explanation for that, because the dollar is going to move almost directly because of government policy, or to be honest, just investor confidence, and something might have happened there. But what's very clear is that traditional finance still isn't in a bad place. The S&P 500, even given the dollar's rally, which is a big deal, it's the first time we've seen something this big in a while, it's had no effect on the S&P 500 whatsoever. We've got another hour at the time of me recording this video until the S&P 500 market closes, and that will also mean the close of this week. It is now a Friday today as well, and we've seen a bit of a pullback on this weekly chart, but still nothing bad. We can, anything can happen in an hour, but it's fairly safe to say that the week might close like this. And I'll come back to you guys, by the way. Make sure you subscribe. I'll make a video covering the actual weekly close with you. I always do that with you guys as much as I can, so I'll be doing that when we get the weekly closes on all these markets, and telling you what I think of the week's developments and what might happen next because of that. But and so make sure you are subscribed to the bell icon, checked and everything so you don't miss it. But with the S&P 500 where it is right now, it is still consolidating at resistance. It's the same thing I keep saying, which is that nothing has changed. And that is the best situation that we could expect to find ourselves in. Gold, very same position right here. Weekly time frame looking phenomenal. We're basically just slowing down as we approach all-time high territory. I don't know if you guys remember this or if you were here back when it happened, but when Bitcoin broke $20,000 back at the end of 2020, this is exactly how it happened. Bitcoin made a big explosive rally right up to the all-time high at $20,000, and then it did take a while. It did take a minute. It stumbled a little bit, but then it exploded upwards, and that's still exactly what I'm expecting for gold. So again, like while the dollar is doing something that quite clearly has had a big negative effect on crypto, other markets, which generally crypto has moved pretty much in line with, have continued to stay in strong positions. And if these positions of strength turn into bullish explosions, I fully expect Bitcoin to enjoy that ride as well. So let's go back to Bitcoin now for me to tell you a little bit more about what I'm seeing on this chart. Now, I've actually got this Fibonacci here, which I thought was pretty interesting. We were finding support very clearly off this 382 level. Now, I've drawn it from the low that everybody thought I was an absolute idiot at to the top, where I was warning you guys that we should find some resistance. And what we found is that we were finding some really good support off this 382 level, and we had even found resistance here previously as well. So definitely an important level on this chart. And if we trace this down, our 0.5 Fibonacci sits right at my green box, which is a beautiful coincidence. And the 61866 pocket sits at 24,000 down to 23.5. This is a really important level on this chart, in my opinion, guys. So important that to stress it, what I'm going to do is I'm going to remove all of these lines, and I'm just going to put a box right here. This golden pocket could be really important for the market, and I'll tell you why. First of all, it's because of the range that it represents. 23.5 up to 24 is really important for Bitcoin, and I'll show you that in 1 minute. But more important than that, it's because we've already responded incredibly well to the 38233 levels, right? We've already found extremely clear resistance and extremely clear support off these Fibonacci levels. And if you simply type this into a calculator, 1 minus 0.382, you will have 0.618. This is really important because these two Fibonacci levels are mirrors of each other. All right, I want to show this to you in a slightly different way, just so you know this really well, because you'll understand why this is so important after this. If I just grab this line and move this into the right place, and then if I just draw the opposite Fibonacci retracement from our high to our low, which is also perfectly valid, our lines fall in the same place. The 618 line and the 382 line fall in the same place. This is really important. This is the way that I like to teach technical analysis. Yes, I want you to have the tools that are stunningly, ridiculously accurate, but I also want you to understand why they work. We don't have to understand the deep intricacies of it, but something like this, pretty easy for you to understand, and it's going to go a long way, when you try and use this tool on your own. I'm not here to give you the fish, but I want you to learn how to fish and build the whole fucking fishing rod yourself. I want you to make the fish farming fucking factory when you're done with my shit. That's what makes me proud of what I do, and that's what we've been able to achieve many, many times. So that's absolutely beautiful. But right here, the 618 retracement with the 6.6 level here, this golden pocket, definitely something very important in my opinion. The 382 level was respected very well, and now that we've established that these are just mirror levels of each other, I must expect that the 618 level might get some attention if we end up approaching this price range. If we get close to this price range, I'm sure this is going to get some action. This is the thing though, this is my big kind of prediction for what I think will happen if Bitcoin falls deeper into the $20,000 range again, into the mid and low 20,000s, is that it's all nice and easy for us to sit in our comfy chairs when Bitcoin's at $27,000, $28,000, $26,000 to say, yeah, Bitcoin has support at 25, Bitcoin has support at 24. Everyone and their nan knows that by now. It's very obvious. It's the only reasonable conclusion on this chart. But it's another thing to actually watch the price $100 by $100 by $100 slide down to that price level. And when we actually get there, I think it's very fair to expect that there's going to be a little bit of panic. I think it's also very fair to expect a deviation. Deviations are Bitcoin's love language, as I've been saying very much in my videos lately. Here is a beautiful deviation. We had a really nice diagonal trend line moving up, and we formed a disgusting deviation below it, and then basically rallied up off that support level. When we were trending up, we had a very clear ceiling with psychological and technical resistance at $30,000, but here we deviated above it and then came back below. Could this be a deviation as well, where we've got really clear support, temporarily falling below it and then coming back up? 100%. It could definitely be a deviation, and this is one of the things I was teasing at the beginning of the video, and I haven't got there yet, but I will get there in just a second. We're getting close now. But this is something that's really important to keep in mind, because if we do see the market starting to slide down towards 25, 24K, once it's there, what we're gonna have on the chart is, and I want you to see this so you can almost visualize it. What we're gonna have on the chart is something that looks a little bit like this, and this can look pretty scary. This can look like it's going to last forever, and certainly for the retail traders that have been so heavily long, if we lose a psychological level like 25 and we fall down to say 24.8, these people are going to have to close their long positions, right? This is the other like really ugly side of what we've got is the only way you can close a long position is by going short, and this is really important. If you have to drive the market lower in order to close long positions, and if you already have a lot of long positions, well then there's probably a lot of flushing out that needs to be done, right? If there's a lot of flushing out that needs to be done, and the only way we can flush out these longs is by going short, I just want to make sure we're all on the same page here. When you close a long, you must go short. It's the only way, right? Like let's say that, I don't know, I bought this mouse, okay? Let's say I bought this mouse. The only way, and this is a position, the only way I can close my position is by selling it. All right, and every time you sell a product, or in this case an asset like Bitcoin, you're selling it into the order book, right? Because there's an order book of like, everybody is bidding to buy Bitcoin. I want to buy Bitcoin at 22, this guy wants to buy at 23, this guy wants to buy at 24, so we build a book of bids, right? On the buy side there's a book of bids, on the sell side there's a book of asks, okay? And every time you sell, you're selling into those bids, you're driving the bids lower. This is really, really important. That's the function of a short squeeze, and that's definitely what might end up happening if we drop lower. This could turn out to be something more extreme than we're prepared for right now, and it's happening after we're leaving an area of very low volatility. So we've got to be very much on our guard right now. That's why I'm saying that if we can fall down to levels like 25, deviations can become very likely. Longs might start getting stopped out. They might start getting liquidated. People might start getting scared, right? It's going to be a scary chart at the same time. At the same time as that, the dollar is rallying. All it takes is a couple headlines to scare the fuck out of traders in this space. We already know this. We've seen the cycles many times, and that's it, and that's it. And people are going to start aggressively selling, and we very well could penetrate below levels like 25, right? Because $25,000 support is all the way up here. All right, it's at our 0.5 fib line. So we could, dip down to like here, and then is it inconceivable to say that we tag the golden pocket and then come back up? I don't think so. I think it would be one of the most likely things to actually happen on this chart now. And that's why I'm also keeping an open mind, with the support levels that are even lower than this, because there are support levels that are lower than this, right? If I take this line and just drop another one down at, say, this key reversal point, you can see a lot of interactions around this price level. Back in summer of 2022, we were finding support here, we were finding resistance, we were finding support again in 2023 and resistance again in 2023. $22,800. Again, if the deviation is going to be big, I mean, last time we got a fucking big deviation, guys, off this level. Let's not forget. Deviations can be very big for Bitcoin. This was a $3,000 deviation. You know, if we manage to pull off a $3,000 deviation again, that puts us all the way down to $22,000 if we pull that kind of deviation off our $25,000 level. I'm not saying that that's going to happen, but I am saying that that happened just 2 months ago. So let's not pretend that this is completely out of the realms of possibility. This is actually quite likely as far as you know, chart patterns go with deviations for Bitcoin. So, you know, now that we've been on the subject of deviations right now, this is the big thing. Could we pull one off right now? Is this a deviation right now? You know, one of the things that really helps to make deviations possible is driving leverage out of the market, right? It's stopping positions out, liquidating positions. It's forcing people to close positions and grabbing liquidity that way. We haven't done that yet. So to me, the odds of this being a deviation are pretty low. And what do I mean by that? I mean that, you know, we kind of fuck around like this a little bit and then recover back up. That kind of thing would happen if we've driven out the longs. But that hasn't happened yet. You know, if anything, people are seeing low prices and becoming even more excited to go long. You know, which just means that there's even more that needs to be driven out. And if it hasn't been driven out yet, the price has to come lower because the stop losses are only lower, right? Like, you know, if you go long, your stop loss can only be below your entry. So eventually, at some point, we're going to find those stop loss prices and they're going to get triggered. So you know, that's what I think there. It's been a while. You know, we're on the 4-hour time frame. Now, deviations, again, you know, they can last a long time. They can last a very, very long time, weeks, months, even potentially. But you know, just generally, we're not looking at, you know, more than you know, I mean, for a fake out, you know, we're not looking at more than a day, and we're at 20 hours right now. But fake outs are different to deviations, right? These are fake outs. Deviations are, you know, like this move right here when we went above $30,000. This would be a deviation, and this would be a fake out. You see the difference, right? Like deviations are just much bigger. They really do fool you. So yeah, you know, I think driving out a bit of leverage, that would be one of the things I'd look for. But overall, and this is one of the things that makes it difficult, is these are pretty hard to predict. You know, the best case is, you know, for me is, you know, the Bitcoin price comes down here and I kind of have some long sitting here ready to fish, just in case, basically. You know, maybe even at lower levels. The whole low $20,000 range is amazing to go long off. The big thing to keep in mind is, you know, everybody became quite bullish towards the top here, but, you know, these drops are exactly what kind of scare people back away from the market. They scare people out of the market, and they you know, they allow the smart money to, you know, kind of reaccumulate at the low levels before the uptrend continues. So yeah, I mean, it's still just not the kind of setup that can worry me, to be honest with you guys. Even though, yeah, there is that deviation possibility. I do want to again talk to you about the Ichimoku cloud. This has been the backbone of so much of my analysis over the last 5-6 years that I've been trading crypto, and we are in it right now. We did fail to get a bounce off the top green line right here, so anywhere is fair game in this indicator. Typically, the top line and the bottom line are going to be the best areas of support for the Ichimoku cloud. And if this dump accelerates or it just kind of happens between now and the end of May, that red line sits right in my green box. It's quite spectacular how these levels are lining up so well. So again, you know, for me, losing the green box is going to be, you know, the start of where I start to, you know, become a little bit concerned. That means dropping anywhere below 23,500. That's where I would start to become a little bit concerned about Bitcoin. But you know, until that happens, you know, I think that we just have a little bit to drop until we find support. You know, and there is a beautiful Ichimoku cloud which literally saved the market the last time, and it's even bigger now. So you know, I don't have any reason to be worried about this as it stands. What I'm loving right now is the volatility in the altcoin market. Ethereum against Bitcoin has been rising up a little bit, potentially into areas of resistance. And if we take a look at where Ethereum is, it has now entered a critical area of support for this chart. Actually, a really nice area where people who are pretty bullish on this market are probably going to consider some long positions off this level right now, and that is definitely quite exciting. Altcoins across the board are at key levels where big moves could be about to happen, and all of that is about to get covered by myself on the 𝗬𝗢𝗥𝗙𝗟𝗓 daily YouTube channel. So I've already been covering a lot of this stuff with you guys. I've been covering the 𝗬𝗢𝗥𝗙𝗟𝗓 analysis with you. Obviously this coin is a lot less sexy now because it's not making money, but this is where because it's not rising up, but this is where it's actually a lot easier to make money off coins like 𝗬𝗢𝗥𝗙𝗟𝗓. This is what people don't understand, is as soon as people look away, that's when all the money can actually be made. And like I said, 𝗬𝗢𝗥𝗙𝗟 is available for you to trade right here on BingX. In addition to indices, commodities, forex, and stocks, you've got everything that you want to trade as standard, over $5,000 in bonuses, and no KYC, no request to submit a picture of yourself or a picture of your ID, which is absolutely phenomenal. So go ahead and check that out if you're interested in healthy market alternatives like that. And if you do want to check out Bybit, they also have access to all the standard markets that I'd be interested in. And of course, they're going to give you up to $30,000 in free money that you can actually trade with as well. And you actually get that when you make your first deposit and start trading. So that is really cool to basically add to your wallet as trading ammunition for yourself. So there you go, guys. I really hope you have enjoyed this video. This has been one of the longer videos that I've made in recent times, but obviously we've had a big amount of volatility. Still not particularly concerning or surprising, so obviously we're just kind of taking it as it comes, and yeah, I think that the market's overall in a pretty good place. I think that we just need to flush out some of the excess optimism, and thank fuck we have so much support below us, and thank fuck we have $2,000 to drop down until we reach there, because that's a lot of space where it's almost like planes cruise at 35k because if a problem happens, they can fall all the way down to 10,000 or whatever the case may be, and they're still fine, which means that that's a lot of headroom that they have to make a mistake. That's a lot of headroom that they have to rectify mistakes, right? That's basically what it's for at the end of the day, is that they want a lot of time, they want a lot of space to take care of problems. And that's what we have with Bitcoin right now. We have a whole $2,000, $3,000, $4,000 drop, and Bitcoin would still be good. Bitcoin would still be good, even if it falls down by that much. And that's a lot of time. That's a lot of price, levels to shake out the longs, to scare people again, to tip things on the other side and get them ready to reverse towards the upside. And that's what I'm expecting right now. I don't think that we're going macro bear. I don't think we're seeing the $15,000 range again. I know that a lot of people are talking about that, and a lot of smart people are talking about that, expecting new lows for Bitcoin. I'm not in that camp. I might very well be wrong about that, but that's okay with me, because if we're going down, I'm going to trade it down, and if we're going up, I'm going to trade it up. All right, guys, I really hope you have enjoyed this one. This was a very good video. Again, make sure you are subscribed to the altcoin channel, where I'm going to be posting videos right now. And check out the links to these beautiful exchanges. Over 50,000, 60,000, I don't even know, 60 here, 65, 70, $72,000 in bonuses. I'm not sure what Bitflex offers. Just with these links in the description. Really cool, well worth checking out. And of course, if you do want to get yourself inside of VIP, learn everything that I have to offer from my course and the VIP, and see how I'm trading in real time. It will be direct information to the data on like where I'm entering my trades and where I'd be taking profits, but also phone calls with me. Yearly members get that too. These are the steps on screen right there. I really hope you have enjoyed this one. You know exactly what to do. Double check the bell icon is checked, obviously, because you want to get these notifications about these time-sensitive videos. And of course, you got to go in your phone settings as well and make sure that you've actually got YouTube notifications enabled, right? Because if you enable notifications from me, but the notifications from the app themselves are disabled, then you're not going to get anything from me. So make sure that you turn on the notifications in your settings as well, if you haven't done so already. Quite a lot of people haven't done that. All right, guys, I hope you have enjoyed this one, and I'll see you all in the next one. Cheers.